Notice, man.
Yeah, for sure. How
Really
are you
means a lot.
guys?
All right, all right. So, guys, this is Rajeshwari Bharadwaj. She's a six-figure trader that I've been following for quite some time now. She trades based on fundamentals, sentiments, and technicals altogether. She's a very wonderful trader that I've been following for quite some time, and she's come here down today. So, thanks a lot for coming again.
Yeah, for sure. Happy to answer any questions, anything like that that you guys may be having.
Would you want to share your screen?
Um, Let me pull up my chart here first.
All right.
This is GJ, right? Yeah, I think this would
Yeah, yeah.
be
Yeah, this is
GG.
GJ.
perfectly fine. I think this would be perfectly fine. No, it's okay. Like, I'll just talk about the chart that you have up. Is this
Hello.
primarily what everyone trades?
Uh,
Trades?
yeah, this is what we've been trading for today.
Okay.
This is GJ, GBP, JPY. So what I wanted to ask you is, could you break down your most recent trade and how you took it, and this
Yeah.
is what I wanted to ask you. It was the
Yeah,
first
sure.
question.
My most recent trade was actually a GU trade, not a
Ah,
GJ trade.
okay,
So if we go on to GU, yep.
all right.
All right, awesome. And then we can go up to the daily time frame. So the most recent that I trade that I took was actually that drop down that you guys see after
Yeah,
price made that resistance. No, the most recent one, the bearish candle.
Yeah, most this one.
no,
Is
no,
there is there a way to annotate on a Google
No,
Meet
uh,
here?
I
no, I
don't
think
think so. So this is why we asked if you could share your screen.
Oh, okay, yeah, for sure. Yeah, for sure. All right. Cool. You guys see this?
Yes,
yeah,
of
yeah.
Okay.
course.
So this was the most recent trade that I took to the downside right here. So
Okay.
the way that I did that, and I'll go ahead and redo this entire analysis with you guys here,
Mm-hmm.
is we started off with the monthly time frame.
Mm-hmm.
So came here, you could create a line, you could create a zone, any of those. But this was pretty much where price was already creating a support, right? So this monthly
Yeah.
candle started forming, price was
Yeah.
already creating a support. So
Mm-hmm.
we're sitting around, let's say 1.35 area. And then as price continues down,
Mm-hmm.
this is I start marking off levels that I need to see price breaking before I'm looking for a buy or sell opportunity. So a break of this level here, for example, would determine if this is going to be a sell opportunity, right? So if
Yeah.
this is a sell opportunity, then where are we headed next? So then I'm marking off some of the important support levels here. So instead of right into this area, because we're going to be clearing out this area right here as we clear, below this 1.35 area, I'm going to mark off the next major resistance, which was here. So then it continues down, and then now you're targeting 1.325. So I know that when I drop down to lower time frames, this is my longer term sell TP area. So I can continue, if I'm going to be scalping, then I can pretty much scalp all the way until price drops down to 1.325. Or I can take swing trades and just scale in opportunities in this entire range. If I'm going to look for any buy opportunities, then again, that would have to be above the 1.35 area and then pushing back up to this previous support right into these areas right here around, let's say, 1.378. So those are my three levels on the monthly time frame. As of right now, if we're just looking at what's the overall structure, it's
Mm-hmm.
bearish. But
Yeah.
price has dropped all the way down here in order for it to grab liquidity consolidated in its own form down here before pushing back up. So now the thought process here is okay, well, for a couple of months in a row, we've been quite bullish, came right back into previous areas of consolidation, created a new high. Are we going to maintain this bullish trend to the upside? Right? And then what also dictates the break of this trend? So in this case, if
Yeah.
price is going to break below 1.35, then that for me would start dictating that price is going to break out of this bullish trend, right? You got that entire bullish trend being formed here. So if price breaks below this area and
Yeah.
rejects this, and continues down, then that's the breakup structure. Make sense?
Yeah.
Yeah, yeah.
And then in other case, if price just respects 1.35 and continues pushing, then obviously we would be targeting that 1.378 area and then even that 1.42 area up top here. So that's the quick analysis from higher time frame on the monthly time frame. Now we go down to the weekly. So it's going on the weekly time frame. This is where you start creating zones,
Mhm.
which in this case would be right around here. So what I'm doing is I'm targeting the average of all these wicks pretty much, and wherever price has been creating support. If I were to extend this level further out to the left and to the right, we see how price either respects this area as resistance or even as support, right? And then same thing for that resistance area, where's price pretty much sitting at the moment. If I'm going to look for any buy opportunities for a continuation up, this is going to be my target right into that area. So this is where price has created support for all of this consolidation. Now when I drop down to the weekly time frame, this is where I start narrowing down onto the price action. So this is where price came all the way up to, rejected this week. Now the thought process is, are we going to be stuck in this area of previous consolidation? And then, when news comes out, break above or below this? Or are we finally going to have enough momentum to maybe continue right back down since we've already come back and retested this previous weekly support? And that's that 1.36 area.
All right.
Then I drop down to the daily time frame. Look at the structure overall, continuing to the downside. What
Yeah.
is price pretty much doing here? You've got a high that's being formed. Price pushes down, creates support right into these areas, gives you a nice little pullback. Another low, price pulls back into the same exact area, grabs liquidity, and also notice how many times price has actually rejected this area, whether price actually creates a resistance there or even a wick rejection. From there, continue back down, respect that 1.336 area that we just talked about on the weekly time frame, creates a lower high, pushes right back down, creates a new low, and now we're coming back and respecting that 1.36 area. So now we wait. Tomorrow we know that is NFP, which is a very important day in general for financial markets. That's what everyone looks at, even central banks are looking at. So if we can hold this area 1.36 as a resistance, then tomorrow we have a very high chance of price continuing back down. This is simply from technical analysis. Obviously, if news comes out tomorrow, which is not in the favor of the US dollar, then we would continue back up and kind of come back to retest these areas here before ending off the week. Does that make sense for everyone?
Yeah, yeah, yeah. It makes sense. So I think that's why the price is right now consolidating. It's not moving today.
Right. So there's that, but then there's also news about, let me see. Can you guys see this now?
Yeah, yeah.
Okay, so now we know that U.S. debt ceiling was a huge part when it comes to macro fundamentals, and so today at 10 a.m. Eastern time, which is going to be 7 a.m. if you're like around California PST, this is where they're going to come back, and the Senate is going to come back into session, and it seems like both parties are starting to agree on a deal on a short-term increase in the debt ceiling that would help the U.S. from the brink of a payment default, but they would have to vote on it again in December um, to avoid that default, to see if they should actually be raising the debt limit or not. Regardless of whether they increase the debt limit or not, the debt ceiling, it is still going to affect the dollar in a negative way. And the reason why is because short term is going to create that optimism. So short term, you are going to see that optimism kicking in when they do start. Let's say they do agree today on increasing the debt ceiling, because that means that they're not. There's a very high chance that the U.S. is not going to default. This is going to be the first time they would ever default on their payment, right? So there's a very high chance of that. But what happens when you keep increasing your limit to actually get a loan, right? Think about it. If you went to, excuse me, if you went to a bank right? And you already have a ton of loans that you're not able to pay back. And now you're pretty much saying, like, hey, let me just continue getting some more loans. Let me continue to increase my debt ceiling. Your financial situation isn't really getting any better. You're just taking more loans, right? So even if you increase the debt ceiling right now until December, it's not really going to change the fact that, you have a lot of loans, you have a lot of debt. And so um, short term, it's going to increase, or it's going to bring in that optimism that, hey, the US, it's not going to default, they're increasing the debt ceiling. But when you think about it, like if you're on a monthly, weekly time frame, you are going to see that bearish trend still being held for the dollar. Any questions?
No, no, nothing.
Okay, cool. Yeah, so today we have unemployment claims coming out in about 3 minutes. But other than that, there's really not much happening when you look at the economic calendar. And we're preparing for 7 a.m., or so, like an hour and a half or so, is when the Senate session is going to resume, and they're going to talk about this debt ceiling. So you might see some volatility kicking in then, and then we're also preparing for NFP, which is going to be a very important point for the Federal Reserve to determine whether or not they're going to actually start tapering in November. So as of right now, they still haven't completely mentioned or even confirmed that they are actually going to start tapering. They've just talked about how they're talking about it, they're discussing it. So there's no confirmation just yet that they are actually going to start tapering.
All right.
What happens if
Sharma, I
they
haven't. Go ahead,
Go
go
ahead.
ahead, Reza.
what happens if they announce the debt ceiling tomorrow, and in the same time the NFP comes positive? So basically, that confirms the decision to start tapering.
So you can't taper if you're going to continue taking out loans, right? And the whole point of tapering is to pull back money from the economy. So if you're going to start tapering right now, in order for you to start tapering right now, you need to see growth happening. If you taper right now, you pull back money from the economy because the ultimate goal for them is to increase interest rates. How are you going to increase interest rates if your own citizens or your own public consumers, they're not able to actually secure jobs that are going to pay them? When you increase interest rates, you're essentially making borrowing that much more expensive, right? And so
Yeah.
if the interest rates increase from, let's say, 0.25% right now to, let's say, 0.5%, people have to pay extra interest, right? And so you can't essentially increase interest rates if your consumers don't even have secure jobs. So right now the problem isn't that there aren't enough jobs. There's enough jobs, but the problem is that there's a gap between the actual jobs opening up versus people actually getting employed, because there's a lot of people who are changing their industries, who are changing their actual skill sets, or acquiring more skill sets to go into industries that are actually going to pay them better. If someone's working at like a pizza shop, very few people right now are actually going and actually working at the pizza shop. But now you're actually going to see that number increasing because the benefit that these people are having and the incentive they were having for them to not go and actually apply for these jobs or get these jobs was the fact that unemployment benefits was giving them a lot more money than they were actually getting at their jobs at that time. And so now unemployment is benefits in a lot of states is coming to an end. And so now that incentive is pretty much gone. So you are going to see these people, where else are you going to go and get your money, right? Regardless of whatever your financial situation may be. So you have to go get a job now. And that's pretty much what's going on. So you still have that discrepancy between actual jobs opening up versus people who are actually employed. Because now it just ended in like September. And so now people are actually going to have to go apply and actually go through the entire process of being interviewed. So you're not going to see that increase in number of people actually being employed until the next couple of weeks or even a month. A significant increase.
So basically, you don't see the tapering coming this year.
No. And even if they do taper, then they're going to be hurting the economy even more.
Okay.
Yeah.
So we should be expecting a bearish dollar in the coming.
In the coming weeks, at least until the end of the year, That's what the sentiment is.
Okay, cool.
Hmm.
So now the unemployment rate that came in just now
Yeah.
and came as positive is usually correlated with the report on NFP coming tomorrow. Like if this one's good,
Yeah.
usually the NFP is expected to be also good, right?
So this is unemployment. So these are people actually filing for unemployment. And then there's job openings. That's what NFP is. So that's what we just talked about, where job openings doesn't necessarily mean that people are actually getting employed.
Mm-hmm, mm-hmm.
And so in this case, throughout the week, we pretty much had, so there's a couple of different data points that you can use for this. So you had ADP non-farm change, right? So you had a lot more jobs actually opening up. That's the key thing, changing the number of employed people during the previous month, excluding the farming industry. So a lot more people going back to work. We're starting to see that data roll in, right? Usually the first Wednesday after the month ends. And then unemployment. So think about it like this. Right now, you just saw unemployment claims coming out much better than they forecasted and all that stuff. Unemployment claims is people filing for unemployment. Well, if in the last month or so, the estimate change in the number of people employed is increasing, then why is also unemployment claims increasing?
But
Right?
it decreased.
This is the most recent data. This is towards the end of September, October data right here.
Yeah, but the unemployment claims decreased, right? So less people filed for unemployment. So more people got employed.
Right. Sorry, 5 a.m. Losing my mind. Right,
Okay, I just
right,
wanted to make sure I got it right.
right.
Yeah.
Um, right. And so this is towards the end of September, October data that's kicking in, right? And then ADP non-farm employment change. And so now we want to, yeah. So we're setting up positive data for tomorrow, and then we also want to see, well, are they actually going to increase the debt ceiling when they do go into session today in about an hour and a half? Right? So those are the
So
two key data or the two key fundamentals that you guys want to be watching out for this week.
probably why that's why the market stayed in the same place today.
Yeah, usually I've seen this happen like every time there's NFP about to come out. So usually unemployment claims won't have that much of a huge impact if it's coming the day right before NFP.
Hmm.
And we usually see that across pairs, especially gold as well. So GU, same thing. And then if we go to like GJ, same thing. You're pretty much sitting into this area. This is the 4 hour time frame. So if you drop down to the hourly, consolidation here again. And then if you go on to gold, you see the same thing here where this is pretty much the no trade zone that I have marked off, given all of this consolidation on the 4 hour time frame. So if you want to take like a scalp opportunity or something like that, then you could use the 4 hour time frame to kind of determine what are some minor zones that you need price to be breaking below, and then look for your sell opportunities. In this case, if we can clear below this zone right here, which is at support, resistance, right? So if you can clear below that, then you pretty much have clean traffic coming all the way down until around 1750, or even coming close to 1745 area. So that would be the clean traffic to the downside.
So Sharma, if I'm as a new trader looking for the fundamentals, so where
Hmm.
can I start? So you
I would
previously
say
said that
start off
the
with, yeah.
Yeah,
yeah, go
let me
ahead, go ahead.
reiterate. Like, how can you gauge fundamentals on, see, now these are the two pairs that we majorly trade, either GJ or gold. Like, how,
Hmm.
how to read these financial news, and then how to gauge fundamentals on the pairs. Like
Yeah,
what?
sure.
Yeah.
I would start off with Forex Factory. So in Forex Factory, you have this, and then there's also, where is it? Is it there? You go. So metals mine, right? And so you have all of this as well, and then let's do calendar. There you go. So you have, this is like the most basic way, or like the most compiled way if you're a beginner. This is where I would start off. Metals, and then also Forex Factory, right?
This
And then
metals mine is in Forex Factory, right?
yeah,
Or
that's
Yeah, yeah.
part of
okay,
Forex.
metals
So
mine. Okay,
yeah, so if you just hover over that.
okay, okay.
So if you're trading these, then you want to focus on, let's say you were trading GJ, right? I would start off only focusing on the GBP and JPY data, right? And then if you're trading gold, then you want to focus on USD data. So the way that I would start off is with GBP and JPY. I would start off with consumer is always going to be at the core of the economy, right? So start off with that. So any data that's related to the consumer, whether that's like the inflation expectations, consumer sentiment, consumer confidence,
Hmm.
anything like that. And then start moving a little bit outwards. So who's the front line who the consumer actually interacts with? It's the retail side, the services side, right?
Yeah,
If I need water, I'm gonna go to a store that sells water. I'm not gonna go to the manufacturer, right?
yeah,
So it's the next thing is going to be the retail side, the services side. So services PMI, retail sales, anything related to that. And then once you start understanding like, okay, how does that relationship kind of work? Well, if consumer spending drops down, then obviously you're gonna eventually see like this rippling effect into the retail side where even their profits are gonna drop down, the money that they're making, their sales are going to drop down because the consumer's not spending as much money in their store. And then from
yeah.
there, you move out further out more. Well, then you have the consumer, you have services, retail, and then what's the layer behind that? Manufacturing, right? So if the
All
store
right.
wants water, they're personally not going to go to like a waterfall or whatever it is, like a water fountain, and fill up water bottles. They're going to go to the manufacturing side, right? They're gonna reach out to like a warehouse or whatever it is and be like, hey, I need like a bulk order of X, Y, and Z. And so the manufacturing side is the one who's pretty much producing the water bottles, putting it in a case, and giving it to the retail side. So then you start understanding like manufacturing PMI, anything related to the manufacturing side of the sector, and
Hmm.
then you understand like, well, how does that relationship kind of work between the consumer, the services side, and then manufacturing side. And so that's how I would start off. And then banking and all that stuff is going to fall into one of these three things.
Hmm. All right.
Miss
Yeah.
Sharma, I have a
Thanks
question.
for
My
that.
name is Shaji. Can I ask it?
Yeah. Hello. How are
Yeah.
you?
All right. Okay. See, many times we watch the news for the forex moves,
Mm-hmm.
and just before the news break out, sometimes the move happens, and
Mm-hmm.
when the news is broken out, sometimes the opposite direction moves. So
Mm-hmm.
sometimes it's very tricky to know. So how do you manage that situation? Because see, sometimes you see an impact immediately. Sometimes you see an opposite impact.
Yeah.
Sometimes the news is some, as they say, sometimes the rumor, they buy the rumor and send the news or whatever,
Yeah.
so that's kind of complex situation, and how a trader, specifically from a currency trader for today, a day trader, how can he digest the news and take a position correctly?
Yeah, so that's actually market sentiment trading going into play at that time that you're talking about. So the way that that works is you have news that's about to come out. So for example, we knew that unemployment claims is going to come out, right? We looked at it, we're like, okay, 5:30 a.m. unemployment claims is going to come out. This is what the previous number was. This is what they're forecasting. So now we start looking at, the ADP non-farm and all that stuff that we were talking about earlier. And so, more people getting employed. So that means less people are going to be going for unemployment claims. And so we're already anticipating, we don't know that it's going to come out to 326. We're just anticipating that's just going to be a better number than the last time. And so that itself is, what was that?
I think
Okay, so
someone is nothing. Go
that
ahead, go ahead.
itself is the sentiment of the market. That's our sentiment as traders. So we're expecting price to move a certain way because we're expecting data to come out a certain way. So then usually before the news actually comes out, you're having a lot of there's people who trade purely on fundamentals and there's people who trade purely on sentiment trading, believe it or not, and there's people who trade purely on technical analysis. And then there's people who use some combination of all three of them. And so you have people who are actually putting in orders based on what do they think the fundamentals are going to come out to be. So when you see that breakout actually happening before news comes out, that's the actual market sentiment trading. But obviously, as soon as the data comes out, they have to readjust their trades. So let's say, we were expecting positive data to come out for unemployment claims. So I'm going to start buying up the US dollar because I know that's good for the US dollar. And then let's say, the data actually did not end up coming out positive. Let's say it came out negative. I would have to readjust my trade because that changes the strength of the dollar for that time frame. You guys follow?
Yeah, yeah, yeah.
Yeah, yeah.
Got it.
Yeah,
Yeah,
makes sense.
and the second point is sometimes the positioning of the dollar index DXY uh,
Mm-hmm.
vis-a-vis, for example, a gold trader.
Mm-hmm.
Sometimes it's confusing that the DXY is strengthening, the
Mm-hmm.
dollar index is going up, but gold doesn't fall. Uh,
Mm-hmm.
but most of the time, it happens. It follows a kind of an inverse relationship.
Yep.
So,
The
can you
dollar
explain to
index
that?
actually the dollar index actually incorporates not just the dollar itself, not just the US economy, but the dollar index actually incorporates a lot of different economies, part of it. And so the reason for that is because the dollar is a world reserve currency. So even if, let's say, you want to go buy something on an international level, let's say oil, gold, arms, whatever, it's all done in US dollars, even if there's no US party that's actually involved. So if there's someone in South Korea who's doing manufacturing and they want to send their product down to someone in, like, Argentina, Brazil, Mexico, whatever, that deal is actually done in US dollars, even though there's no American party that's actually involved. And that's because the US dollar is a world reserve currency. So the DXY doesn't only represent the US economy, it represents all transactions that are actually being done in the US dollar. So it incorporates a lot of other economies as well.
Right.
There are some situations where I've seen the
Yeah,
DXY is
sorry.
going up, and the US bond, 10-year bond,
Uh-huh.
that goes in the opposite direction. So
Mm-hmm.
sometimes, as a gold trader, you can get confused that DXY is going up, and then the 10-year bond
Yep.
yield rate is, let's say, going in the other direction. So,
Right.
I mean, as a fundamental analyst, how do
Mm-hmm.
you take a decision?
Well, when it comes down to gold, I'm always looking at the macroeconomics, not just the US. The US is going to play a huge part, of course, but I'm also looking at, well, is there any fear of any sort that's being put into the market when it comes to major economies, or even, like, the Japanese yen and things like that. So the Delta variant, that wasn't necessarily only related to the US, right? It was all across the world. And so that itself was creating a lot of fear for risk currencies, risk, the major economies and all that stuff. And so we also saw gold increasing from there because that's where a lot of the investors went. Now there's a lot of uncertainty around debt ceiling. Well, are you going to actually increase the debt ceiling or not? And so that's why when you go into higher time frames, well, you already have the structure that's being set up for you on the daily and weekly time frame. But that uncertainty, where I was talking about that short-term optimism, but over long, like, it's not really the best thing for the dollar, you're starting to see that being reflected into intraday timeframes like the 4 hour, 1 hour, and those timeframes because there's a lot of uncertainty there. And so you have to take into account not just the US dollar, you have to take into account, like, what's the overall sentiment like. As you're looking at fundamentals, you don't have to be, like, 100% amazing at it, but as you're looking at fundamentals, your pretty much job is to not memorize, like, every single data point or every single detail, but your job is more like to understand what's the overall sentiment like around certain fundamentals, and what is their impact going to be like on the fundamentals. So if the dollar weakens, then obviously we are going to see the gold increasing, right? And then if the dollar weakens, then where's the next currency that a lot of people go to? It's the Japanese yen. That's the next safe haven currency. So that's how I determine when I'm looking at gold. That's pretty much what my thought process is like. What are the macro fundamentals that are actually affecting global economy? And then how does that affect my decision if I was a major investor? Would I actually go, put money or invest into risky currencies, or, emerging economies, or some of the larger other economies that are not part of the safe haven community in a way? Or would I go and park my money into something that is safer, like the US dollar, the Japanese yen, and things like that?
Yes. Okay. Now you are talking about a trader like us. who is actually a technical analyst as well as get some idea about the fundamentals. Like for instance, you have a good idea about both. So when you take a position and when you, let's say, decide to buy or sell or close a position, will you go by the way the charts or the candles are moving, or you go by your kind of your perception or what you said about the sentiment? It's a simple question because, see, we are all human beings. You take a decision to buy or sell or to close. So will you go by the movement of the candles or will you go by the sentiment?
I go by all three of them. And so the way that it works is I look at what's the actual news that's coming out. The news is the one that creates the sentiment. And then that is, both of them are reflected through the charts, right? So I'm going to look at, well, what's the news coming out? What is that sentiment like? And then I'm looking at the technical analysis side where it's like, well, do I have a break and retest here? The technical side is always going to set up for fundamentals, right? So in consolidation here, this is market collecting orders. This is where we know that if price were to break out of this even on the daily time frame, then there's going to be a ton of volume that's going to follow, right? So it's the same in this case where you had, consolidation for some days, you had a nice little pullback and then a dump down that happened. Same thing here, consolidation and then a dump down that happened. So fundamental technicals are going to set up for fundamentals. Now what I do is I look at the fundamentals that are coming out and I align them with what the market sentiment is, and you will see that adjustment happening through volatility in the technical analysis side. And then I look for my break and retest. I look for my structure. Is it following the weekly structure? Is it following the daily structure? And then I look for my trade opportunity. So I use all three of them together.
So in summary, I will say that there is no exact answer to it. It's just mostly a perception.
Sure. Sure. I mean, the more you start to understand fundamentals and more you start to understand, those three sectors that I was telling you guys about, the consumer, services, manufacturing, and the more you start to understand, what are these decisions that they're making in the central banks, in the government, when it comes to these currencies, when it comes to debt and all that stuff, the easier it starts to become to understand exactly what's going on and where we headed. And so I know I just figured out how to open the chat here on Google Meet, but there was a question that somebody was asking about, which book. So one of the really good books that just came out that helps you understand these kind of things in conjunction is called The 10 Rules of Successful Nations by Ruchir Sharma. And so understanding how does it all work together?
10 Rules of Successful Nations.
Yeah, 10 Rules of Successful Nations by Ruchir Sharma.
Okay.
And so that talks about, let me pull it up for you guys. And that talks about pretty much every aspect of the economy when it comes to GDP, when it comes to population growth, when it comes to consumers, all of that type of stuff in conjunction. So this one right here looks like
Could you repeat the name of the author?
Ruchir Sharma, right here. I just pulled it up for you guys.
Okay.
So how did your trading journey actually start? Now that you see that, you have all these fundamental aspects in your trading. So how did it actually start, and what was the initial difficulties that you faced as a trader to find yourself this profitable today?
So it actually started off in the stock market, as a lot of you guys probably know. I started off with the stock market because, again, I don't come from a family of investors. I don't come from a family my parents are blue collar workers, right? They came from India to the United States, and that's what they do. Yeah. And so I started off with the stock market because that's the first financial market that you're really exposed to. And then from there, it's understanding okay, exactly what goes on to the stock market. You're always seeing news about companies. You're always seeing Apple, all these bigger companies, they're pretty much right in your face, right? And so I started off from there, understanding the stock market, understanding news that affects the stock market, reading financial statements, this and that. And then from there, it got to the point where I was well, the stock market opens in the morning and then it closes mid-afternoon for me here in California. So then there has to be another financial market that pretty much opens up for longer or, has some more volume rather than just the stock market. And then that's where I started reading up on other financial markets. came across Robin Lumsden, came across Jeffrey Harris, those people who actually worked in these spaces. So they weren't just like, professors, they weren't just authors. Now they're professors, but they actually worked in these spaces, right? And so they were talking from their experience. They shared a lot of things that they've learned throughout the years in their papers. So I love like reading because it helps you, first of all, you grow some skill sets just like, reading better, learning new words, and like, comprehension, critical thinking, all of that stuff, right? So there's that, but then you also get to gain actual knowledge. So the point isn't just to read one article or like one book and be like, I'm a master at this. You have to continue reading a lot of different things, formulate, how do you learn, formulate your own opinions, test them out, this and that. And then that way I got into foreign exchange. So I learned about a foreign exchange. Technical analysis I already had down from the stock market. So I applied the same exact thing. That's why my strategy is pretty much just structure, break, and retest, right? And then from there, I had to understand that, well, I can't no longer look at Apple and then try to determine the US dollar, strength. That's not going to work. But now at least I had that foundation of understanding like what exactly is fundamental analysis. So now I had to broaden from microeconomics of just companies and sectors into macroeconomics of countries. And so then I started studying up on, well, what are the different things that affect a currency? What are the different things that affect a country's strength? Why would like an investor want to go to the US dollar and not to the UK or the pound, right? And invest there. And so that's pretty much where my journey started. So using all my previous experiences and building upon them.
All right.
Any other questions?
Hi, Miss Sharma. This is Melinda here.
Hello.
I just wanted to know, like, I do not have the basic knowledge about forex industry much because I work as an FX dealer. But then I wanted to know if I have to look at the charts of USD, KWD, KWD, USD. How would that? How can I go through this analysis?
USD CAD, is that where you're trading?
Kuwaiti dinar, Kuwaiti dinar, KWD.
Okay, USD KWD.
Yes.
Yeah, Kuwait, correct. Okay.
Yeah.
Okay. This one right here.
Yeah.
This is how your chart looks.
Yeah.
Man.
That's exactly what I have to deal with.
Oh man.
Wow, that's the first time I've ever seen a chart like that. I mean, I don't really trade a lot of exotic pairs like that, but
This used to be a pegged currency. I
That-
think very recently only it got depegged.
That looks like a barcode though.
yeah.
Printing side by side.
Unless
Um,
you have some national interest in your own country, you should not be trading the pair.
So this is not a national interest, but I work with Al Ansari. So Al Ansari exchanges its KD for USD to buy as a base currency to exchange the other currencies out there. So that's one of the main reasons why I have to deal with this chart. So if you can give some insight on it, it would be great.
honestly, like in this case, like you would probably just be looking at structure. I'm not sure how you're gonna do a break and retest on a chart like this. But when it comes down to fundamental analysis, it's pretty much the same exact thing across pairs, across currencies. You have to understand like, okay, what all is actually, being incorporated in the Kuwaiti dinar, right? Is it just that economy, or is it like if they're an oil exporter, for example, right? You want to be paying attention to OPEC, like Canada, USD CAD, that has a direct relationship, inverse relationship with OPEC, with US oil. So then that's something that you want to take into account, like what all is actually incorporated within the Kuwaiti dinar, and then also the US dollar itself as well. But if you're looking at technical analysis, honestly, I don't really trade exotic pairs like this. So I've never really seen a chart like that. I mean, my exotic pair is really just GBP SEC or even USD SEC or Euro SEC. And that this is how these charts look. So pretty similar to what we trade. But if I was
Correct.
looking at, just
Yeah.
other technical analysis, I haven't really seen anything like that. But when it comes to fundamentals, like I would do the same exact thing that I would do for any other pair.
Okay. Okay,
I'm
thank you.
sorry if that wasn't much help.
No, that's perfectly fine. That's perfectly fine. Thanks a lot.
Yeah, for
Uh,
sure.
Sharma, I just want to ask you as a
Yeah.
technical analysis, because see, for me, I've been quite comfortable with fundamentals, but
Hmm.
my challenge is I never studied technical analysis.
Hmm.
I've been looking at this price action and the hammer and a few chart, what do you call candle space shapes and stuff like that. Basically, looking at resistance and support. But
Hmm.
basically, what do you advise should be the focus when I have to learn technical analysis to make money?
Stick to the basics. Whether it's technical analysis, fundamental analysis, whatever analysis, stick to the basics. You could learn all these patterns, but what good is it going to do if you really don't understand what's really happening in the market, right? So you could learn like what's it like Morningstar or like, whatever
Hammer.
soldier,
Mhm.
yeah, all that stuff. But what good is it really going to do if you don't understand what's really happening in the markets or what's really happening to those
Mhm.
levels? So I know all of those because I in forex I started off the same way that a lot of people have when it comes to like that learning curve of like those indicators, Fibonacci retracements, patterns, flag, triangle, whatever it is. And then like within the month or whatever I was learning, I was like, this doesn't even make sense because if you're even looking at a simple indicator, whether it's a moving average or RSI or any of those, they're really just grabbing the data points off the charts. So if I can already understand what's going to happen on the charts by using the basics, which is market structure, is it a higher high, higher low, uptrend, downtrend, support resistance, those kind of things, then I'm already going to be ahead of this indicator, right? And
True.
majority of the time, you have like these divergence, convergence, whatever it is between these indicators and the actual price action. So keep it simple. I mean, you add on to those things. A lot of people use SMAs or EMAs or RSIs, but as long as you understand the core of price action, which is the actual chart right here, then you're going to be way better off. You could use the rest of them as supplemental information to add on to your strategy, but keep it simple. Support resistance, market structure, and then add on whatever else that you want to do.
So, what's your opinion on order blocks or supply and demand? Like, how do you treat them?
It all
Yeah,
really
order
comes down
blocks.
to
Yeah,
right. It all comes down to the same exact thing, right? Understanding what's actually happening in the market. So if I'm seeing that price is coming back down and for a very long time and taps into the same exact area, then I'm understanding, well, there's a lot of buy orders that are pretty much being set right at these levels here, and the market's pretty much getting ready for it. When I'm looking at this specific chart, what I see right
yeah,
now is in this entire area, this is where all the supply is being accumulated. After
yeah,
this, are we getting ready for a major sell-off, right? Because we did have a nice little push up,
yeah,
but we never really came back down to retest some of these key areas, right? And for that to happen, you need the
yeah,
fundamentals to kick in. So are we just accumulating supply here, or are we actually going to start seeing a lot more optimism kick in for the pound versus the yen, and then finally start pushing back up, right? But right now, to me, it looks like we're accumulating some supply down here as the market fails to break out of this entire area, but it's maintaining that downtrend at the moment right
Can you
here.
analyze? Can you analyze this entire pair if you don't mind? Like from monthly to the daily
Higher
to the
time
4 hour.
frame, yeah,
Yeah.
yeah. So let's start off here
And
on the
how
monthly
do you
time
apply
frame.
fundamentals into this?
Mhm. So if I'm looking at this, the very first thing that I'm going to do is mark off certain levels, and then I'll go into the actual fundamentals here. So I'm looking at the most current price action, and then I'm going to take a look at, well, what is price doing at these levels here? So the most current price action is price creating support right at these levels. And then I just rounded up to whole numbers. It's a lot easier to remember 149,900 versus 149.891.
True.
The 149,900, that's where price is creating that support. And then when I look at this entire zone, then I see that there's some sort of resistance or support that price always respects in this area. So you have that all that resistance right here. You got that little pullback support resistance here again, and that's the furthest that this chart goes. And then the next thing that I'm going to do is mark off. Well, if price were to break below this area, then where are we headed next? right? In this case, we would probably be sitting somewhere around here, which is all this resistance. So once we can break below this, we're clearing out all of these minor resistance areas, right? Pretty clean move to the downside until we come and tap into another minor resistance area, which is going to be around, let's say, 146.3, somewhere around here. Well, if I'm going to look for a buy opportunity, let's say price just holds on to this area, continues pushing back up, then where are we headed next? Resistance, you got that resistance, you got that consolidation support area being formed right here. So those are the three levels I'm going to mark off, 155, 700. And now if I'm looking at it from a fundamental perspective, then what happened at every single of these major moves? Well, somewhere around here is where actually Brexit was introduced, where they actually started taking it seriously and actually started talking about it. And that's where you had that sell-off happening because the UK was breaking away from the EU. So that was obviously going to bring in some weakening into the currency because the UK is heavily reliant, and so is the EU. They're both each other's number one trading partners. They're heavily reliant on each other and their resources. The EU is still fighting to get access to the British waters, right, for fishing and all that type of stuff. And the UK is running out of like energy, it's running out of pharmaceutical supplies, this and that, which it needs to get from the EU. So they're both like, reliant on each other. And so that's where that kicked in, where the UK is a little bit more reliant on the EU, obviously given where EU is comprised of a lot of different countries versus it's just the UK. And it's just an island that's surrounded by EU countries. And so that's where that sell-off happened. Okay, cool. Now we're starting to see some like stable talks going on where they're talking about a lot of different terms, this and that. And then from a technical perspective, that was the fundamentals where they're still talking about it. There's a little bit of stability, but from a technical perspective, this move up is simply a correction of this entire move back down. Then we come right back down when there's like uncertainty, when they start missing deadlines, this and that, which we have seen in 2020 as well, right? When they started missing deadlines, when they were discussing like a lot of different terms, this and that. And then finally, as price taps into this area, creates a new low. And then somewhere around here is where they started talking about, well, we're coming up to a deadline. If we don't have a deal done by December of 2020, then we're going to have to trade on WTO terms, which is they're not going to have a free trade agreement. And then a continuation back up when we started seeing some more optimism kicking in, where they actually started taking these talks seriously, where they started agreeing on certain things and then pushing back up. But now we're seeing back at another key level, and this is coming from everything that's happening with the Delta variant, everything that's happening with inflation across a lot of the major economies, everything that's happening with even post-Brexit consequences. So when I'm looking at this, those are the fundamentals I'm going to be focusing on now. What's happening with post-Brexit at the moment, this is another news that just came out today, where the EU drafts Northern Ireland plan to avert collision with Boris Johnson, and they're going to talk about this early next week. So they're drafting proposals to address the British concerns about trade flows between Northern Ireland and the rest of the UK. And because of this issue, the UK said that they were going to invoke Article 16 if, where was this here exactly?
What is Article 60?
So the Article 16 gives right
16,
to either the UK or to the EU to suspend parts of the agreement if it causes serious economic, societal, or environmental difficulties. In this case, the regulations that the EU had between trades between the Northern Ireland and UK, saying that, hey, we're going to check every single thing that's coming in, that's going out, restrictions on certain things that could actually be, traded or that could be transported. And so the UK came and they're like, everything that you're doing here in extra certification, this and that you're asking of like our drivers, all of that is actually causing our economy to be harmed. We're trying to recover from COVID. We just opened up our economy and, we just opened up traveling, this and that. But this entire portion is affecting heavily onto our economy. And the EU pretty much said, well, we're not going to budge on whatever, we agreed on. So it is what it is, right? That's what pretty much the response was. And so the UK said, well, okay, if it is what it is, then we're going to go ahead and invoke Article 16. And then right after the UK said that, the EU said, you go ahead and do that, and we're going to bring you to the European Justice Court. And so there's that entire thing that pretty much went down. And now the EU is saying like, okay, well, as early as next week, we're going to actually start talking about this proposal to address the concerns that you have. So these are the fundamentals that you want to be looking at when or especially that I'm looking at when I'm looking at GDP JPY, and we're sitting at some of these previous key levels, because somewhere around this area in 2018, they had the same exact talks about who gets what and what access do we get. Right. And so from a fundamental perspective, from a technical perspective, we're sitting at key levels. And from a fundamental perspective, we have inflation concerns in the UK, you have post-Brexit consequences, you still have Delta variant kind of having its effect on the economy. And so all those kind of things kind of coming into play at the moment from a fundamental perspective. So I know that those three things are what I'm going to be focusing my attention to in the coming weeks when it comes to the economic calendar, when it comes to macro fundamentals. Then I drop down to the weekly time frame. So on the weekly time frame, same thing, a lot of bullish momentum, haven't really come back down to retest this 146 area down here. All we're doing is really just consolidating in this level, right? So now that's why I need to wait, and you can narrow in some of these zones. So I would narrow that in right there. So if we can clear below 149,900, then we are essentially coming back down and tapping into 146,300, which is going to be a retest of this entire bullish momentum to the upside. If price fails to do that and all we do is just consolidate here, then we need to see some positive fundamentals, a lot of positive fundamentals to help us push past this bearish trend on the weekly time frame. The higher the time frame, the more important and more impactful this fundamentals have to be.
All right.
And then drop down to the daily time frame, same exact thing. Now you can narrow in some more into your price action. So somewhere around here is a resistance. You see that resistance right there, resistance in the past, and all the support. Everything in between, ton of consolidation. So if you're just looking for a trade where, like a swing trade or a position trade, the chances are you're probably not looking to enter until price can clear, let's say this 152-100 area for that buy opportunity to the upside, or that 149,900 for those sell opportunities to the downside. Now, that doesn't mean that you don't have trades in between. You have trades in between, but understand the restrictions and limitations of your trade. What I mean by that is if price is pushing up right now, I know that, this is a very key level, that 142-100. Just because price is pushing up right now, I cannot expect that price is going to push up and ultimately we're going to tap into 155-700 and I'm catching a sniper entry. That's where a lot of traders get caught up. They're trying to look for that sniper entry. Just look at, your one trade is not going to move the markets, right? Realistically, it's the big institutions, it's the big players, those people who are putting down like a lot more money that are moving the markets. So why not let them take the hard part? Let them move the market, and then you just become a part of it once you get the confirmation. So in this case, I'm going to let them move the market in whichever direction that they want, and then I'm going to take a small part of it. So if price breaks above this, then my small part's going to kick in as soon as 152-100 is broken, and we start continuing up towards 153, and then even to 155-700. But let's say, there's a sell-off that happens, then I'm going to wait until this zone here is cleared out, and then I'm going to take the part coming all the way down to 146-300. I'm going to let them move the market. I don't have to worry about it. Right, so now all I have to do is understand, like, okay, here are the fundamentals that are coming out, and how are they going to affect my currency or my pair? And then as you drop down to lower time frames, you're going to start looking for, some of more minor levels and start narrowing in into your price action. Eventually, you want to get to the point where you're like, you're dropping down to the 30-minute time frame, and you're looking at this and you're saying, well, here is the exact price action that I need price to respect or break out of, and then I have a nice buy opportunity or sell opportunity. You want to narrow in as much as you can into the exact price action of consolidation that's giving you the highest probability of price continuing in your direction.
We have had a really tough time, breaking out of that, range, right today. Like, we faked out in the London session. Again, we faked out, and then, we came back up and we have not broken out yet.
Yep. Well, even in this case, look, the zone that we just created on the 30-minute time frame, the thought process here is, well, we have that consolidation, but now price isn't really breaking below that, right? And now if I go up to the 4-hour time frame, well, look at that. That entire level lines
Yeah.
up with previous consolidations and like support resistance areas. So now
Yeah.
you're sitting at a key level. You're right. Now, if prices to break above this area, then I need to see a clear break and retest forming either on the
Yeah.
30-minute, 15-minute, depending if you're scalping, then 15-minute, 30-minute, and then a continuation up. If I'm looking for something longer like a day trade, then I want to see some break and retest forming above this, like on an hourly time frame, and then I have an entire range of about 50, 55 pips that I can take advantage of.
All right. Man, this has
All
been a
right.
very insightful session till date. Hands down, till date.
Thank you. I really
Sharma,
appreciate that. Yes. Yes.
I have another question.
Guys,
Go
one
ahead.
at a time, one at a time. So yeah, who's it?
Thank you. So I was gonna ask you if you believe in the theory with point of control and the whole institutional training with the VWAP and those zones that are like coming from the futures market. It's a different platform,
Mm-hmm.
and with the point of control saying it's like a magnet attracting the price to an area of liquidity. No.
No. And the reason why is, well, I mean, financial markets, they intersect, right? Whether it's like, high correlation or low correlation, whatever it is, whatever happens in the stock market is obviously going to be reflected in the US dollar, things like that. But no, I don't think there's like a magnet that's like pulling the price to a certain liquidity area or anything like that. But I mean, if that was true, then I'm pretty sure that there would be a lot more traders who would be profitable rather than the percentage of like 90% of people who fail. If that was honestly true, right? But I think there's a lot more. I think the markets require a little bit more critical thinking than people like to give it credit.
Okay, thank you.
Yeah, for sure.
Akshay.
Hello, Vijay.
Hello.
Sukhpreet this side. Who is this new person? Please introduce him from where he is.
I'm sorry.
Brother, from where you are.
I'm from India.
Okay, that's good. Okay, I will contact you there in Discord.
Okay, thanks a lot, man.
Yeah. So I would look at so let's say I look for a swing trade opportunity here on GJ, right? Let's say price is, it's going to maintain the bearish structure, continues down. So now I look, majority of my swing trades that I'm taking, it's usually with the group. And so we start off with like a scalp opportunity, and towards the end of the session, I'll say like, hey, start managing your trade. This is how I would manage my trade. I just closed, 50%, 25%, whatever. And then this is how the rest of the trade is going to continue. And so I like pretty much tell them. But the way that we do it is just looking at, here's the next support area. If the zone is cleared out, let's take a look at that entire range. So let's say even if I took an entry here, continuation down around 94 pips is where I'm going to look for a partial. So I'm just doing the same exact thing that you would do for like a scalp trade or anything like that, where you look at the previous price action and then you start to understand like, okay, well, here's the next support area. If this support is broken, then where's the next support area or the next resistance area, things like that. And then you start taking partials there and then secure. If you're 90 pips into your trade, there should be no reason for price to just, push right back up and take you out. You're 94 pips into profit, take some partials, move to break even, trail your stop loss, any of those, and then let the price continue down. And then as it continues down and starts tapping into next support areas, take another partial and then continuation down. When I'm coming close to my last TP, which is in this case like 146.300, in this range here, I probably won't be looking for a scaling opportunity. So this is about 100 pips. This is like the last leg of my trade. So if I'm going to look for any scaling opportunity, it's going to be between this low support that it's creating and then all the way down here for about another 100 pips. So this is where my next scaling opportunity would be. Nothing down here. Mm-hmm. No, retest. Yeah.
Sharma, can you break down your biggest win till date? The trade
Yes,
that
I
you've
can.
taken, which was your biggest win, and can you just break it down? Okay, USD SEC.
Yeah, this was a position trade, which I caught in
Mhm.
around April. April, yeah. And so let's see here. Okay, so the way that I did this was actually I'm gonna do the replay for you guys right here. So this is what I was looking at this entire push up until around December. And around that time, December of 2019. So until that time, we were starting to see that, okay, price is coming up close to some resistance area. We start to see some forms of exhaustion here as we drop down to lower time frames. I'm going to highlight that for you guys as well. But here's same exact thing, mark off any support resistance areas. So this is a previous resistance that price tapped into, and then you had a huge correction, obviously for a huge massive push up. Same thing here, price started rejecting around these areas. You had a little fake out, and then you had all this consolidation here, right? So now price starts pushing back up. As we drop down to lower time frames, I'm gonna mark off this area here. So this was September of 2019, and then October, and around December is when we start to see this little bit of a pullback happening. So now we were looking to see, well, is this area again going to be respected or anything like that? So now we drop down to the weekly time frame, and on the weekly time frame, we start to see that you don't really see like much of a clear structure being formed into this area, right? You have that entire bullish push up, but after that, like coming close to November and even December, there's no real clear structure. All you have is price pretty much stuck in this little area right here. So in this case, we're looking for, is price going to, as it shot up, respect this and then continue back up bullish? In this case, since this is an exotic pair, this is a US dollar against a krona. So the krona isn't really going to have much of an impact, right? It's not as big of an economy as the US is. So if this pair is going to be moved, it's going to be moved by US fundamentals, right? And so in that case, we're pushing back up. You didn't have much of a clear structure, this little bit of consolidation here. So now from a technical perspective, we want to see, is this area going to be held as support, or is price going to just come right back down after creating that topic rejection? So then you have that on the weekly, drop down to the daily, what's going on the daily time frame. So on the daily time frame, create a zone right into these areas here. So that's that little support zone that I want price to respect if it is going to continue. Right now, it doesn't seem like, all I did was a topic rejection. It's coming right back into that area. So right now, it doesn't seem like there's enough bullish momentum to help price continue in that direction. So now the next bar, price kind of just hangs around. Okay, so now when I'm looking at that, the thought process is, well, is price simply doing this to come right back down? Or is price actually trying to respect this area as support and then continue back up? But even here, this is pretty much where we're stuck in, right? So price isn't really going much. It's not giving us enough confirmations for any buy or sell opportunities just yet. So we start hanging around, finally start breaking below. Look for the break and retest here as well. And then as price continues down from here, that's where the entry was taken. I don't know the exact price. Obviously, this was like months ago in 2020, but
Yeah.
this is pretty much where the trade was taken to the downside. And then
How long did you hold it?
I
I
held
think.
it until June.
Whoa.
Yeah, so this was a position trade that was held until June. That entire move down pretty much to the downside, and then held it until June. June right here, June, and then here's August. Pullback, and then after that point, when you're position trading like that, you obviously have to take into account swap fees. And so that's why I only held it until that time, because now swap fees were starting to accumulate. Even
Yeah.
if I started taking some more scale-in opportunities, we're sitting at some consolidation areas here. And so you want to take into account, and then there was already a lot of uncertainty that was happening when it comes down to fundamentals for the US dollar.
Wow.
Yeah.
Takes a lot of patience to hold on for that long.
Yeah, and then so these are like if you're gonna start getting to position trade or anything like that, I would highly suggest like start with like paper trading, right? When I
Right.
started getting to like swing trading, I actually paper traded GBP SEC, and this was 2018, 2019, as this entire push was happening here. So if you're gonna go get into these type of things, look at some pair that you might be interested in trading, and then start paper trading that. See how it moves for a couple of months or so, while you're scalping, while you're swing trading, while you're doing the style that you're most comfortable with. And then once you start understanding from position trade aspect of like, okay, this is where I'm going to scale in. This is how I'm going to do like you know, manage my trade, take partials, all that type of stuff. Once you start getting that down, it's essentially the same exact thing if you were scalping, if you were swing trading, if you're day trading, or even position trading. It's just different time frames, and now you're holding onto a trade for longer. So if you're looking at scalping, you're probably not holding onto a trade much longer than a couple of hours. If you're day trading, the entire day. If you're swing trading, a couple of days to maybe a couple of weeks. If you're position trading, then from a couple of weeks to a couple of months. So it's just different time frames, but you're using the same exact strategy.
Right.
See, when you're trading a pair like Swedish kroner, do you focus more on the fundamentals because it's a strange country with currency? I mean, how can we digest that economics?
Yeah,
I mean,
so when I'm trading GBP SEC, then I'm focusing on the UK economy, the UK fundamentals, what's really moving the economy in the UK. If I'm trading USD SEC, then I'm taking a look at USD's fundamentals. The krona itself is not going to move the pair. It's a very weak currency compared to the pound, compared to the dollar. I mean, even look at the interest rate right here, $11 or 11 pounds and 93 cents, right? So it's super weak. It's not gonna do anything. It's not gonna move it. So you want to pay more attention to the stronger currency, which in this case is the pound.
So
in
is this pair profitable? I'm sorry.
yeah.
Is this pair like really profitable? Like how's the spreads here? How are the
Yeah, so with
spreads?
exotic pairs, it's I mean, if you were even to calculate the pips,
Uh-huh.
it's in thousands, right? So that's a little bit different. But yeah, any pair is really profitable. Just understand like how does it move. I don't want to sit here and be like, yeah, it's
Mhm.
super profitable,
Yeah.
and then
Yeah.
have everybody kind of jumping onto it and then being like,
Yeah.
yo, I just blew my account. It's
Sure.
volatile,
This is volatile,
right?
is it?
It,
This
it is
pair is volatile.
volatile.
Okay. All right.
Yeah, because if you drop down to the 4 hour, massive push, massive, candles that are forming. Now this is where it starts to look a little like a barcode, right?
Yeah.
So that's what you want to watch out for. It's a very volatile pair. Even if you're trying to scalp this is pretty much what you're going up against. A lot of
So this kind of exotic pairs are actually risky for a beginner, isn't it?
Yeah.
yes, it is.
I mean, it takes an expert to make money in this kind of currencies compared to, let's say, somebody trading dollar yen or
So
yuan.
yeah. So I think let's put the question this way. So what pair would you suggest for a beginner to trade with? Like I see a lot of new traders looking at every other pair, but then you as a trader, what do you suggest? What would be the easiest pair for a new trader to
Go with the
start trading
major
with?
pairs. Go with the major pairs because they don't move as crazily as a lot of other pairs do. So Euro USD, GBP USD, GBP JPY is a little bit of a harder pair.
It's a
But
minor
once you
pair, right?
start,
Yeah.
yeah, and then once you start understanding like, okay, how does this pair actually move, then it becomes a little bit easier. But yeah, so start off with GBP or USD, Euro USD, Odd USD is a really good pair that you could start off with as well. I would kind of stick to the major pairs. I try to kind of stay away from NZD USD. I look at it every now and then, but as you can see, there's not much that really happened in the last
Yeah.
couple of years for NZD USD. So I would say stick to the major pairs and then once you start understanding those a little bit better, then start moving into minor pairs. And then once you start feeling comfortable there, go into like, commodity like gold. Once you start understanding that, then go into exotic pairs.
Got it. All
All
right.
right. Awesome.
Anyone else? Any other questions?
Yeah, ma'am, how do you tackle the big bank or the big shark attacks?
I don't tackle them. I just
Big
let them
shark
make the
attacks.
moves, and then I go.
Big
I
shark
let
attacks.
them make the move, right? I'm not going up against them as a retail trader. Anything that you do isn't going to affect them. So it's like a dog barking at an elephant. The elephant doesn't care,
Yeah, but
right?
you definitely keep a stop loss in all your trades, isn't it?
I keep a what?
Stop loss, a
Yeah, I
stop.
do.
Yeah.
Yeah. And so that's what I'm saying. Like, I won't even, there's no point of entering a trade if you don't get the confirmation that the big move or the big move is already happening, right? Or the pair is moving in your direction. So that's why I look at the daily, weekly, monthly time frames and come down from them, those time frames, and those levels. So I let them make the move. I don't tackle them. I don't do any of that stuff.
So you made more money from more wins or like less wins? I mean, some people say that you should have a high win rate and or more bang from your winning trades. Which one is your strategy?
I don't take a lot of trades. I take quality trades, and I'm sure there's people here who could agree with that.
Yeah.
I don't take a lot of. I don't have to take a trade every single day. There's times where I don't take a trade an entire week, and it's because I
Oh,
don't see my setup.
So
And
coming into
people
this,
see that
yeah.
in the group. People see that like on TradingView, this and that. When I don't post ideas, right? If I don't see a quality trade, I'm just not taking it, which is perfectly fine because when the quality move does come along, then even then it's not like I'm risking a lot on those quality trades to make up for the time that I didn't trade. I only risk between 1 to 3%. Majority of my trades are 2% of my account or even previous day's profit. And so you don't have to trade. You don't have to take a trade every single day. Just make sure it's a quality trade that runs long enough for you to have decent profits.
So don't you get into FOMO, like or don't you get into FOMO? Because I get into a lot of FOMO. And as a beginner trader, how did you overcome FOMO? When you just started out,
Yeah, so
like.
absolutely, I did go through FOMO,
Mhm.
but what I quickly realized is the beauty of Forex is that you could sell and you can buy, right?
Yeah,
If
yeah,
I were trading just stocks, then yeah, I would have like a huge FOMO problem, probably, if that's
mhm.
all I was doing, because you have to buy the share, right?
Yeah,
Unless
yeah,
you're like going into options, call puts, this and
yeah.
all of that stuff. Then in this market, if you can buy and you can sell, there's no point of having FOMO because, okay, let's say you missed like this entire sell opportunity. Well, then you have an entire buy opportunity waiting too because the market never just moves in one direction. The market is always correcting itself, whether it's a downtrend, whether it's an uptrend. So, okay, well, yeah, you missed like a downtrend, a nice downtrend that happened. Catch the move back up, right? And
Yes.
then again, know the limitation of your trades where this is a very strong support area. If price does push back up, then this is somewhere I want to start closing out 90% of my trade and those kind of things, unless price is going to start breaking the entire structure. Same thing, if you miss like a big buy move opportunity, then catch the move that's giving you the retracements. So that's the beauty of Forex. You don't need to have FOMO, you have trades everywhere.
What's the biggest lot size you've ever used?
The biggest lot size that I have ever used is $100 lot, and that was when I made my first million.
Whoa.
Wow.
Wow.
The
Yeah.
Bitcoin trade wasn't $100 lot. I don't on Bitcoin. I don't go for more than 1% of my account.
Wow. Any other
So,
questions? Yeah. Go
so
ahead.
you always try to take quality trades. And
Hmm.
has there been a time when your quality trade went sideways? And if it has been, then how did you manage your risk and how did you overcome that? Like,
If my quality trade doesn't go my way,
yeah, yeah, yeah.
yeah, so I would manage. So the way that I take my trades is kind of work backwards in a way that what's a stop loss that I'm comfortable with. So let's say in this case, price just creates that resistance and it starts to drop back down. I'm probably not going to be looking for this trade opportunity if my stop loss is anything bigger than like probably 30 pips at the maximum. I think the biggest stop loss that I've had, and this was on GU recently, was around 23, 24 pips, something like that. And so I try to go in with trade opportunities that will give me the highest probability of my win rate, which also means that price is going to go in my direction. Like, where can I take a trade where I don't even have to worry about, price coming back and hitting my stop loss? And so that's where I use the higher time frames with the lower time frame confirmation together. So I do have a stop loss, but I don't go in with major stop loss. And so if there's a quality trade that goes against me, then my stop loss is already tight enough where I'm not incurring huge losses, but it's big enough where I'm giving price enough room to retest previous levels and create any top wick, bottom wick rejections before, continuing in my direction. If price were to, go against me, my stop loss is already going to stop my trade as soon as it's like in the first leg of it going against me, so I don't have to incur huge losses.
So during that time, you don't manage the risks. You just leave it as it is. Like,
Yeah, I don't close
uh,
50% or any of that. And the reason for that is because if I'm closing out 50% of my trade, then that means I'm less confident in my trade. And I don't want to be in a trade opportunity where I'm not confident in my trade, because now you're gambling at that point. Either it's going to 50% chance it's going to go your way, 50% chance it's not going to go your way. And so I rather not take that gamble, and I actually want to enter with a strategic plan and a strategic analysis.
so for us beginners, it's good to take like very few trades, but a quality one. Like sometimes we are very impatient and take like more and more trades, but it is like in longer terms, like it is good to wait like very few trades, but like very good quality setups and confirmations. So
Well, if you're a beginner or not, even if you're like an advanced trader and you've been trading for like
Sabush, can
years.
you mute yourself? I'm sorry. Sabush, can you mute yourself? Yeah, thank you. Go ahead, Sharma. I'm sorry.
So whether you're, a beginner or you're an advanced trader, whatever you consider yourself, even if you've been trading for a lot of years, I think it's still good to take quality trades over quantity. You don't want to be sitting there and taking trades every single day, because that, I think someone mentioned like win rate earlier. That's going to affect your win rate if that's something that you really care about. I personally don't. And the reason why is because, again, I don't have to take a trade every single day. I only take the trades where I see the actual move happening, and it gives me the potential to just hold on to this trade for, a couple of days, couple of weeks, even couple of months. And so if you're a beginner or not, go for the quality trades. Look for trades that are going to give you the opportunity to hold on to them for like, a couple of days, couple of weeks, those kind of things. Or if you're scalping, then same exact thing. Where's your quality trade? Look at the 4 hour, look at the 1 hour, look at 30-minute. I have time for one more question, and then I have to head out to go meet someone in like 30 minutes.
Last question, anyone? So, what would be your quick 5 tips for a new trader?
For a new trader, stick to the basics, no
Or,
matter what you're
anyone,
doing. Even if you're trading fundamentals, stick to the basics, understand what, like basic economics. And then if you're doing technical analysis, understand the basics there as well, support, resistance, market structure. And then understand that the market is not going to be moved by just one type of trader, a technical trader, fundamental trader, market sentiment trader. So start to like kind of have some sort of an idea of how to use all three of them together. It could be a completely different variation of like whatever I have. It could be, whatever you want. Just know that there are other types of traders in the market who also participate and also help with these movements. So it's good to know, who's all part of it, and how do they think on a very very fundamental level, on a very basic level. So don't dismiss just one style of trading. If you're having a hard time understanding it, ask questions, reach out to people who are willing to help. I'm sure like yourself, you guys probably have some people in the group, myself, Stefanos, there's a lot of people who are out there who are willing to actually help you. So reach out for help. I mean, that's what the community is for.
So, guys, Sharma has a mentorship course that retails around $350. So, this is the exact overlook, of how she trades, and this is how your mentorship should go. She's a very insightful person to be around with. So, thanks a lot, man. Thanks, really, thanks a lot for doing this.
I have a last
Yeah,
question.
and I just want to add, like, I'm not here to like promote the mentorship or
Yeah,
anything
no,
like
no,
that.
no, not at all, not at all. This is on
Right.
my part that I'm doing this because see, I myself
Right.
I'm interested. I myself am
Yeah,
interested
no,
actually.
I just want to say it, but like, I mean, of course you could enroll if you'd like, but you know, I'm always open to help you guys out. Just hit me up on Instagram, any questions that you have, anything
Yeah.
like that. Open to just having Zoom calls with some people too if you need help.
Yeah.
But
Matt,
yeah, thank you so much for having me on. It's
1 minute.
truly an
Matthew
honor.
has one question.
Yes.
Matthew, can you be quick?
Since you read books, are you aware of the Sentiment in the Forex Market by Jamie Seattle, that book?
Am I
Because
sorry? Could you repeat that again?
are you aware of the book called Sentiment in the Forex Market by Jamie Seattle?
Yes, I am.
I just started reading the book, and it says the economic indicators is just a myth, because she has taken a detailed analysis and how it affects the market, and it's just the psychology of the people which is driving the market. Because most of the time, like we look at it like it has a positive correlation,
Hmm.
but on the survey and all the data she took and did the analysis, I think it's just the people's psychology. What do you think about it?
Yeah, so
Because
that's why
sometimes
you
even
yeah.
before the news, the move happens, right?
Hmm.
And even if the news comes out, there is some negative correlation, like sometimes. So
Hmm.
I
Yeah,
just I
so
haven't finished the book, but that's how it goes in the
mhm.
starting. So
Yeah, so that's why I said like, you know, read like different books and kind of like understand like what's the underlying theme of all of them. So in that book itself, they're talking about like, you know, how it's a myth, this and that. And then you're gonna see the same exact book or like, you know, something about sentiment analysis, this and that, where I'm gonna say like, hey, it's very useful. And so in that case, I would highly suggest like, you know, just read the different books. Obviously, it's not a myth because people are trading based off of fundamentals. If that wasn't true, then every time Powell was speaking, every time interest rates were coming out, every time NFP was coming out, you wouldn't see, you know, people panicking over it, right? And so the moves they do happen, and you know, someone asked earlier too, like the same exact question, but when the moves do happen before the news comes out, that is market sentiment. Those are fundamental traders anticipating a certain move to already happen and be a part of it, and then they correct their move immediately right after the news comes out. So it's definitely not a myth, but there are some parts. You're going to see this across a lot of books in general where they're going to say like, hey, this thing isn't true, or like this thing is true, but like, you know, it really doesn't turn out to be that way. And you'll learn that as you kind of you know, go and back test on the charts and things like that, and you'll start to understand what's the correlation like. So when you're reading books, another tip that I'll give you guys is take everything with a grain of salt. So don't take like everything too seriously or anything like that. Just understand like what's a book kind of trying to tell you, right? And then try to understand like some of the main aspects of the book and the main like themes of the book, main ideas of the book, instead of like those details. And there might be certain things that you don't agree with. Like I don't agree with that economics is just the myth, because it does move the market.
yeah, it does move. Yeah, I
Mhm.
just wanted to know what you think about it. All right,
Yeah.
thank you.
So
Yeah.
thanks a lot. Thanks a lot for coming in, Sharma.
Yeah,
That's really
thank you
nice.
so much for having me, guys. And then, yeah, that's my Instagram. Feel free to reach out whenever.
Yeah.
But it was an honor being here. Thank you.
Thanks a lot. Take care.
Thanks for your time.
Thanks for your
Thank
time.
you so much.
So we'll have Stefanos. Yeah, we'll have Stefanos next week. All right. To all of you here, we'll have Stefanos next week. I think next Thursday is when I know Stefanos will come in.